Okay, well, thanks for joining us today, everyone. This is a webinar titled The Taxman Cometh. Pastors, are you ready? Tips and tricks to avoid an audit. I will be moderating the webinar this morning or this afternoon, wherever you are. My name is Eric Burgess, and I'm from Aplos Accounting, and we do fund accounting software for churches and nonprofits. We actually have a full suite of accounting solutions beyond just fund accounting, and I'll get to that shortly. And the guest this morning, is Scott Larson. He is a CPA, and he runs a site called Payroll for Pastors, and we'll introduce him in a second there. Let me give you a little bit about Aplos Accounting real quickly here. We are simple in Greek. That's what Aplos means. And this quick backstory on how we got started. Tim Getz, our founder, started Aplos in 2009 after he was kind of upset that he couldn't find any accounting software to really serve the church that he was on, which was a large multi-site church here in the Fresno, California area. He needed fund accounting. He needed to have one software solution that just would prevent him from using these hokey workarounds that are from Excel and other software programs like QuickBooks, who don't really do a good job at doing fund accounting. So what he did was essentially build it out himself. He got a couple programmers together, and the rest is history. We're a 40 plus size company now, and just a quick few reasons to use us. We do true fund accounting. We track designated funds and more. We customizable chart accounts to fit your church's needs. We're cloud-based, and that means we're accessible anywhere on any device with automatic backups. So your data is safe and it's intact, and some data integrity as well, with some security measures that we have in place. We do departmental reporting, track expenses, and there's also some other cool features that we invented, to help tag transactions and whatnot. Let me just kind of give you a brief introduction to Scott, and then I'll let him take it from there. Scott is a CPA. I mentioned, he runs payroll for pastors, and he also has a firm that he works for, and he's going to tell you a little bit more about that and some exciting news about a new website that he launched that should be a valuable resource for your church. So without that, everyone, I'll hand it over to Scott.
I titled this The 7 Biggest Problems I Could Find or that Pastors Have with Taxes. And in the thousands of pastors that I've dealt with, probably the first thing to look at is whether you're exempt from Social Security or if you're in the Social Security system. And to be exempt from Social Security, you have to file the form 4361 and go through that exemption process. So you would know if you're exempt. But if you are exempt, then your housing allowance and a lot of the other things that are set up for most pastors aren't subject to Social Security tax or the self-employment tax because you're exempt from it. Now, the majority of pastors are in the Social Security system, and everything we talk about from a structuring standpoint affects you. How do I report my income? How do I report my housing allowance, my ministry expenses? How do I avoid paying taxes and minimize it? What are the keys to not getting audited? How do I avoid it? Those are some of the things that we're going to talk about today. And if we have time, we'll do a little bit about bivocational pastors and part-time pastors, and how you report that income, your honorariums and things like that. But I want to get to the gist of most of it because we're limited in time. So how you get paid, it dictates how you report your income. Most of the audit flags and the reasons you'll be audited is because you're not reporting things the way the IRS is expecting to see it. If you have your ministry income on a 1099, well, the IRS doesn't want that. They want it on a W-2. If you report it on the W-2 the wrong way, it could be an audit flag. So doing it the correct way, it doesn't guarantee you won't get audited, but it really minimizes the chance of you being audited or selected by the IRS computers, randomly to be audited. So the normal way that your W-2 should look is box 1 should have your salary component of your salary package in it. If the church elects to have withholding for you, box 2 should have your withholding in it. If you're in the Social Security system and you want to have withholding to cover all your tax liability, you would figure out what your Social Security income is, which is usually your W-2 income and your housing allowance at 15.3% approximately, and whatever your tax liability would be. Now, if you make $50,000 a year, you're married, you have 2 kids, and your wife doesn't work outside of the house, and you have a $50,000 salary package with $25,000 being a housing allowance, your W-2 is going to say in box 1, $25,000 of salary. And in box 14 for your housing allowance, box 14 for other information, you'll have housing allowance, $25,000. So 50% of your income is, W-2 taxable income in box 1, and the non-taxable housing allowance, which means it's not taxable for income tax purposes, but it is subject to Social Security tax or self-employment tax, is only reported in box 14. That being said, it is not an IRS requirement that you report the housing allowance in box 14. It's suggested, and I used to not do it because if you wanted to adjust what the housing is, some churches add the amount of the housing allowance that the pastors don't use during the year back to their income, and they put it on their W-2. Well, with all of those types of things, if you are adjusting it, doing anything with a housing allowance, it makes it real difficult to put a number in box 14 that's going to match whatever housing allowance you report on your self-employment schedules and things like that. So I always shied away from reporting it. But then you run into pastors that around the country that come in or send their information in. The first question I have as a tax preparer is, what's your housing allowance? And they say, well, I don't know. So they got to go back, ask their treasurer and all this garbage. And so I've got to put their tax return on hold because I don't know what their housing is. So I sort of now recommend that if you can, do us, the tax preparers, a favor, put your housing allowance in box 14 or have your treasurer do it, or at least, with an email attached to it, tell your tax preparer what your housing allowance is if it isn't on your W-2. And that's the start. If you report your income the way it should be, you're going to avoid audit flags, and you're going to avoid the IRS looking at you. So the standard W-2, the way the IRS wants to see it, is your salary part of your compensation package in box 1, and withholding in box 2 that can include your Social Security tax. And remember, you have to pay both halves, so it's 15% of your income, your salary package, in there, plus any federal withholding. The other point of all this is a lot of pastors don't have any taxable income because they have a housing allowance. So a lot of times it just becomes their Social Security tax. Then you have to look at the fact if you have kids. Now, are you getting credits, kid credits? Does your wife work? How much income do you have? Do you get the earned income credit? And look at your tax situation, and you can subtract that from what you expect your tax liability to be. to come up with how much withholding you should have. And in doing that, remember when you structure your compensation that you start with what's not taxable. And if you have an accountable plan for your ministry expenses, those are all pre-tax. If you have contributions to your 403B, those are all pre-tax. Your housing allowance is not subject to income tax, but subject to Social Security or self-employment tax, and your salary is subject to all taxes, income tax and Social Security. So when you're looking at that, maximize the things that you don't have to pay any tax on, given your ability, and probably minimize your salary. Again, every one of the things I've talked about is situational to the pastor, and every one of you might have your W-2s reported a different way. A lot of churches show pastors' income as if they're a regular employee. They do all the withholding, the Medicare, the Social Security. But if you look at box 1 and box 3, box 1 being wages, box 3 being like Social Security or Medicare wages, there's going to be a huge difference. And a lot of times they'll report that huge difference as the housing allowance, because they want to pay the Social Security tax they have for the pastor. So they just make it look like it's a big adjustment between the Social Security income and the taxable wages. And although that really helps the pastor, it gets the church to pay half of your self-employment tax or Social Security tax, it's not really correct, because what it can do is inadvertently allow a lot of pastors to qualify for an earned income credit that they don't have coming. But if you are reporting it that way and you are getting an earned income credit, I've had the IRS okay it. They've said that's fine. I've tried to tell the pastor they're not eligible for the earned income credit, because your earned income credit should be calculated with your W-2 income and your housing allowance minus any ministry expenses. That should be your Social Security tax base. And if you're in the Social Security system, that's what they use for the earned income credit. If you're exempt from Social Security, you only have to use your box 1 W-2 salary amount or wage amount. So if you're exempt from Social Security, you're going to be able to maximize your earned income credits and things like that without any issues, because you don't have to include your housing allowance in that calculation. Very big tip, and that's something that a lot of people do wrong. Number one, if you're in the Social Security system, a lot of people don't check the box to treat your housing allowance as subject to Social Security or self-employment tax. And a lot of people that are exempt from Social Security don't check the right boxes in your TurboTax or whatever you use to make sure that you're not paying self-employment tax and that your earned income credits are being calculated correctly. And we are coming out, and I'll put a little plug in for my new website, ministryresourcecenter.com. We've got 11 or 12 training videos on the different topics I'm going to talk about. And I've got a tool coming out called the Virtual CPA, which if you enter in your salary package, will calculate what your tax liability should look like, what your tax return with actual forms should look like, what your payroll forms, the 941 W-2, and what your liabilities are, so you can set your withholdings, your estimates, or whatever you want. And it also automatically fills in all the resolutions that your church might need, your board, for every pastor you have on staff. But that will be coming. We just launched the website today with all the videos. The tool should be coming by March 1st. We got to work out some of the bugs to make sure we're not having it do things wrong. But that should help you a lot. You're going to be able to use that to do what ifs about your tax situation. If you're single and you're getting married, if you're getting a raise, you can enter all this stuff in, resubmit it, and you'll be able to tell what's going to happen to you tax-wise. And if you're in our subscription service, you can call me, and we can do a what if scenario, Skype or just phone, while we're both looking at the screen. I've made the program on the cloud, and it's interactive, so it can be used by anybody, anywhere, and they'll always be accessible to have our help. But again, on how do I report my income, it's the W-2 goes in box line 7 on your tax return. and that would be your wages in box 1. The housing allowance out of box 14 is not included in that line. It goes on your Schedule SE, your self-employment tax schedule, as a housing allowance. And most of the programs have a box to check and put in how much your housing is and whether or not it's subject to Social Security tax. Now, the other part with a housing allowance is, did you spend all of the housing allowance you had allocated? Number one, you have to have a resolution for a housing allowance. But 2, if you allocated $25,000 for your housing allowance and you only spent 20, what do you do, or do you have to do anything with the other 5,000? And yeah, you do. The other 25,000 or the other 5,000 that you didn't spend of your housing allowance has to be reported as income, because you weren't reporting it as income if you used it on your housing expenses. So where do you put that $5,000? Well, some churches, if they're proactive and before the W-2s are ready, know how much pastors haven't spent of their housing, and let's say that 5,000, they would just add it to your W-2. If you don't have that convenience, and most smaller churches wouldn't, you would just put it in the other income line, line 22 on your tax return. They have a space where you can put what it's for, an explanation. You put excess housing and put the amount in the numeric field on line 22. Some guys and some programs automatically add it to what your W-2 amount would be on the tax form, and then they print a schedule saying W-2 money X and housing, excess housing allowance X, and then they add it together on line 7. So if you're going to put it together with your salary on line 7 and it's not on your W-2, provide a schedule with your tax return showing why there's 2 numbers and they're not supported by the W-2. If you're putting it, including in your W-2, you don't have to do anything. And if you put it on line 22 as excess housing allowance, you don't have to do anything extra. So that's the big thing to do about housing. You got to remember that it's subject to Social Security tax if you're in the Social Security tax system. And that's probably the biggest thing that I see that people make a mistake on, is they think the program's calculating it because you're paying Social Security tax and it's a lot. Well, just for an example, on $25,000 of wages, your self-employment tax is going to come out to, almost $3,500, $4,000 in between there. Well, that seems like a lot. Well, it should be double that, because if your housing allowance is $25,000, and because you get a deduction for half of your self-employment tax, it comes out to some weird number like 14.12%. But on $50,000, it's going to be a little over $7,000 in self-employment tax if you have no income taxes. And it's almost criminal. I mean, how can a person making 50 grand afford $7,000 in Social Security tax if they don't, get any tax credits for that? Well, if you have 2 kids and you have an earned income credit or whatever, it may knock some of that down by getting child credits and that. But realistically, in most programs, the biggest problem is they don't check the right boxes to make sure that it's being taxed the right way. And because people doing their own tax don't always know what the right way is, they assume the program's correct. So you got to be really careful with that. And again, that's why I've got this tool coming out, so you can actually compare what your tax return is, how you prepared it, or your accountant did, enter your salary package into our package, and it'll give you something to compare your tax return and see if it's being done the same way. And if not, why? So again, the housing allowance is not subject to income tax. The unspent portion of it is, and the housing allowance in its entirety should go on your self-employment tax schedule as part of your self-employment tax base, which usually is your housing allowance and your W-2. And nowadays, with the health insurance laws, any reimbursements you get for health insurance that were because you have an individual plan and not a group health plan through your church. And I'll try to cover that area a little bit later because there's some exciting news in that area where you can actually exclude $10,000 of your health insurance cost and other costs by adopting a special HRA called a QSERA. And we'll have that out on our website by the 1st of March as well.
Scott, before we move on to the next slide, I just wanted to just do a quick poll here, if I could. I'm going to ask a question here. How big your church congregation is. Just a few more.
And just
10 seconds.
to give you a little insight into the size of your church congregations, 75% of churches have under 150 congregants, and 80% are under 200 congregants. So the vast majority of churches and pastors, or vast majority of churches, are under 200 people.
Got it. Great. Okay, there we go. All set for you, Scott.
Fantastic. Now, one of the rules that came out, I think it was back in the 80s, the decent rule, has to do with your housing allowance and your ministry expenses and how to report your ministry expenses. The decent rule states that your ministry expenses are deductible in relation to your taxable and non-taxable income. So in our example of you have a $50,000 salary package and $25,000 is or cost of ministry position, whatever, but your offering from the church is $50,000, your salary is $25,000 and your housing is $25,000. That means 50% of your income is taxable and 50% of your income is not taxable. Well, your ministry expenses, your mileage, your dues, I think with the Assemblies of God, they tie it to their district, not their church. That's a ministry expense. All of your curriculum, babysitting, anything you do for ministry should count as ministry expense. And that's probably something I'm going to make a little segue into that. The biggest problem I find with ministry expenses is that most of the pastors don't report what their actual expenses are. Not that, I'd like to say they lie about it, but they don't. They actually are afraid of the IRS and don't report any of it because the church isn't reimbursing them for it. Well, that's just wrong. The IRS will tell you to claim whatever you incurred as long as you have a reasonable position to claim it. And if you get audited, which less than 1% of the population gets audited, unless you have all these audit flags, and if you can't prove it in an audit, well, okay, we're going to charge you tax and interest. I mean, it's everybody gets so scared of the IRS, and it's one of these unfounded fears. Of course, nobody wants to go through an audit, but at the end of the webinar, I'm going to give you how to structure your compensation so you almost eliminate being audited. And it has a lot to do with how you treat your expenses. But let's say that you drive 15,000 miles as a pastor. Just in general, your mileage. A lot of the pastors I talk to say, well, yeah, I reported, 1,500 to 2,000, because most churches can't afford to reimburse their pastor for the expenses, or the pastor doesn't want to because it wasn't visitation or it wasn't a conference. Well, if you're reporting 10% of your mileage, my question to you is, what percentage of your life is ministry? Is your ministry only 10% of your life? Well, how come your mileage, 90% of your mileage isn't deductible if 90% of your life is ministry? So you got to really look at philosophically and psychologically how you view yourself as a pastor. Are you a representative of your church in everything you do outside of the church? Do you stop for meetings on the way to church? Do you stop at the post office, the bank, to or from? Do you have practices or this or that before or after you report to the church? If you do, all that becomes ministry miles, not commuting. So there's a lot of ways to view it, but your perspective on how you view yourself is going to dictate how you record your ministry expenses. So if you drive 15 or 20,000 miles and you're not claiming 80% of that as ministry, I would say that you're not viewing yourself as a minister 80% of the time. Because if you are a representative of the church in your community and everything you do is as an agent or a representative of your church and ministry. So that's the number one thing I see people doing wrong, is they minimize themselves, are afraid of the IRS, and won't take any expenses. So I'll end with that. But let's say that you did incur, you had 15,000 miles and 12,000 of it is ministry miles. That'll be $6,500. And you have curriculum, some dues to your district or your national. So, let's say you have $10,000 worth of ministry expenses. And 10 to 15,000 is about the average that I see around the country when people actually view it the correct way and have a good perspective on who they are as a minister and what they can claim. And especially in the Assemblies of God or any of the denominations that require you to tie to the district, 15,000 is not out of line at all. If you're making 50 or 60,000 a year, 10% is a dues because it goes to the district. You got 6,000 right there of an expense, and because that is a ministry expense which is not subject to Social Security tax, and it's deductible. And then you'd have your mileage and curriculum and gifts for congregants, funerals, weddings, whatever. So your ministry expenses will be reported now that we have a little view on how to consider the ministry expenses. How do you report them? Well, there's two real ways to do it. If you have an accountable plan at your church, you can proactively, utilizing the dual resolution approach, set aside what you expect your expenses to be if the church is not reimbursing them. And let's say it's the $10,000, you put it off to the side. So if your salary package is 50, you take 10,000 and put it to your accountable plan, which is paid out in a separate check from payroll. So now your salary package is 40,000. And if you had a $25,000 housing allowance, your salary, your W-2 wages, box one, will only be $15,000 now. So by structuring it that way, you've taken $10,000 of expenses and made them pre-tax. You don't have to put it on your tax return, and it really helps you out a lot. It's not subject to income tax or Social Security tax. Now, if you don't have an accountable plan and you have to report those expenses, 10,000 on your tax return, well, the decent rule comes into play. And that says that you can only deduct 50%. What percent of your income is taxable or non-taxable? And if you're making 50 grand and 25's housing, that's not taxable, because Social Security tax is not income tax, and they're talking about taxable for income tax purposes. So you only get to deduct 50% of your expenses. So you calculate the $10,000 of expenses on your Form 2106, the employee business expense form. But most programs will have a box to check that you're a minister. And if you have your housing allowance in there, it automatically calculates the percentage of the expenses you can exclude and deduct. Well, in this case, you're going to have $5,000 of expenses you can deduct, and that's going to go onto your Schedule A, your miscellaneous itemized deductions. Your Schedule A is where you report your house interest, property taxes, and charitable giving. Well, down on the bottom of that form, there's a miscellaneous itemized deduction. So that's where that would be reported. Well, also there, they reduce your deductions by 2% of your adjusted gross income. So, you're getting less than 50% of your $10,000 of expenses if you do it correctly, given this example, if you don't have an accountable plan. So you have an accountable plan, you get $10,000 of your expenses pre-tax, not taxable, and you don't report it on your tax return because it's already carved out of your W-2. If you don't have an accountable plan and you're putting it on your tax return, you've got $10,000 showing on your 2106, your business expense form. You've got, 4 or 5,000 ending up on your Schedule A as deductible. Those things are audit flags. So probably the biggest way to avoid an audit as a pastor is to adopt an accountable plan, because you take all your ministry expenses off of your W-2 and off of your tax return. It's not reported. And you're accountable to your church, not the IRS. And I don't know anybody in the ministry that wants to be accountable to the IRS. It really comes down to they have to be, because their church has not allowed them to adopt an accountable plan. And the reason most don't have an accountable plan is because they don't understand it, because nobody's explained it to them correctly and showed them how to implement it. So when you're looking at your business expenses, just remember, it's all a matter of, do you have an accountable plan? And what your perspective is. How do you view yourself as a ministry? How much expense do you have? Do you commute, or is it a meeting? Is it business expense? So you really got to get in tune. And if you need help with that, that's what I do. I help people realize what their expenses are. You don't want to get carried away with this. Housing allowance, you can set high, because if you don't spend it, you got to add it back to your income. You don't want to set your ministry expense too high. You want to be somewhat cautious on that. So, I advise people to be fairly close to the vest on the expenses, because one of my quoted favorite savings for the last 25 years has been pigs get fed and hogs get slaughtered. So you don't want to get greedy with your ministry expense, but you absolutely don't want to underreport because you're afraid. So be realistic with your ministry expenses. And if you overspend, you have more expenses than your accountable plan in the amount that you set aside, up at the next year. And if you spend too little, that part actually should be added back to your income, because any money you don't return to the church that you keep that was given to you as part of an accountable plan should be added back to your income as a, quote, non-accountable plan reimbursement. So again, I could talk for an hour on all of these areas, but the real thing is, how do I report my ministry expenses on my tax return? And it's, if you have an accountable plan, it should be already netted from your W-2, and they shouldn't go on your tax return. And if you don't, it goes on your Form 2106, and you can only deduct the percentage of the expenses that are in relation to how much of your income is taxable. So we'll go on from there. Number 4, how do I avoid paying taxes? Well, everything comes down to structure. Do you actually talk to somebody who knows what they're doing when you're structuring your compensation package? Most of the time, the treasurer or the board, when they're getting a pastor, is going to say, well, we got 50 grand for this position, or 40 grand, or 30, or 70, or whatever, but here's your money. This is what we can offer you. How do you want us to allocate? Happens at more churches than I can count. That's the vast majority of them. That's how they do it. Bigger churches are a little more used to it. They probably have set salary packages. They know what their benefits are. The 80% of you that are in smaller churches don't have that luxury, and they're looking to you. Your treasurer is probably not a church tax law expert. There might be a couple of them, but they're going to have to go to the same seminars you do and try to figure it out the same way you are of what can I do for taxes. So when you're structuring your compensation, you really want to look at what's not taxable and what your situation is. I mean, you're 50, 55 years old, your wife's or spouse, depending on if your wife's the minister or if you're the minister, has a good job. Maybe they're a teacher, a dentist, nurse, whatever. But the spouse that's not a minister has a great job. Well, maybe you can maximize your 403B to avoid taxes. Because in ministry, your 403B contributions or the churches are not subject to income tax or Social Security or self-employment tax. And if you've been in the ministry for a while, I had a guy down south that he didn't want to, he got a big bump in salary, and he says, I don't need it. My kids are out of school, but I've only got 10 years before retirement. What do I do? And I said, put it all into your 403B. And he goes, I can do that? You only told me I can only do 5,000 or 6,000 in my IRA. I said, yeah, you can put, he got to put $56,000 in his 403B. It just saved him, 20,000, well, maybe not 20,000, but it saved him a lot of money, 15, 17,000, whatever it was, in taxes. So it's just amazing the things you can do depending on your situation. The other thing is the accountable plan that we talked about with the ministry expenses. If you're of the normal small church that doesn't reimburse you for everything that's associated with your ministry, then you can use this if the board will pass a resolution stating that they want to have an accountable plan. A lot of the bylaws in churches have it as part of those bylaws, but just to be safe, I always say, when in doubt, adopt the resolution, put it in force, just cover yourselves. And we have those on our website as well, all the resolutions and all the other things. But if you structure your expenses that you have to report, if you've got to report your expenses on the 2106 form on your tax return, you should be using an accountable plan, because that would take it all off your W-2 and you wouldn't have to put it on your tax return, and you get the maximum tax savings. You double the tax savings from deducting your expenses using an accountable plan versus a non-accountable or just putting it on your tax return. So you think you're paying a lot of taxes, restructure your compensation. If you're a one pastor church or a smaller church where you have a lot of input and the board actually likes you and they want to help you and they want to be proactive for you with taxes, accountable plan is absolutely the best way for you to go. But you got to know how to do it, and we don't have time to go into all the implementation strategies of that. But I think I do have a 8 or 10 minute video on it on my website on resolutions and how to adopt an accountable plan. And of course, we have the ways that you can subscribe to our systems coming up and all that. But you got questions, you can call me. It's tax season. It might take me a little bit. You can email me questions. But I know this stuff is a lot. I hope I'm explaining it well enough, but these are very complicated things that are very simple at the same time. Very complicated because a lot of pastors aren't tax experts, and they're not really great about all the financial. They're shepherds. Our mission statement is we want to free you up from the burdens of your financial burdens of the church and the IRS to release you to do the ministry that God called you to do. And by specializing in structuring pastors' compensation and helping churches with their financial needs and all that, I think we're uniquely positioned to do that. But by looking at your retirement, looking at your situation, what can you afford to do? If you don't need the money, the retirement is absolute. Your housing allowance, how you structure your housing allowance. People seem to think that maximizing the amount they can do for their housing allowance is the best thing they can do for themselves. Well, it's not always. If you're exempt from Social Security and you're only getting $1,500 a month or $1,000 a month from your church, and your wife doesn't work or whatever, and you put it all as housing allowance, you just, no, I don't want to say that word, but you just made it so you're not going to get any of the credits because you have no taxable income at all, no reportable W-2 income, and you're exempt from Social Security, so you won't get an earned income credit. Where if you would say, no, that $15,000 or $18,000 or $12,000, whatever the amount is salary, you probably get a lot of free money from the government from your earned income credit. So how you structure your compensation, how you use your housing, how you use your 403B deductions, how you use the accountable plan is individually specific. And it's situational because every situation out there, every one of you has a different tax situation. You can't ask somebody what your refund was and how come, Pastor so-and-so got $5,000 back and I had to pay $7,000. It doesn't work that way. Everybody's church pays them different. Everybody's personal situation is different. You all have different views on how you look at yourself as ministers and what expenses you think you can deduct. All of it has everything to do with what your tax situation should look like. And I've got to say that in almost every church I've ever went into, there is something you can do to help your pastor that you're not doing. It's not an absolute, because my wife says I shouldn't use absolutes all the time, but it's about as close as you can get to all of you. But most of you, 90% of the churches aren't doing anything wrong. They're just not doing everything they can. So I don't want to make this like a church bashing thing, because all these people are volunteers. Everybody's doing the best they can. They all are sincere. They're sincerely trying to do everything they can for you. But, you get the treasurer on your board, God-fearing accountant, whatever, the probability of him being a minister's tax expert is pretty much slim and none. It's really hard to find that person. But again, I'm more than happy to work with any treasurer and give them the ropes, because as this keeps growing, I'm actually going to need help. But again, how to avoid paying taxes, it's all to do about structure. It's structuring your accountable plan, your retirement, your housing allowance, balancing it based on your tax situation, and maximizing your refund based on how you structure your compensation package.
That's great. Now, Scott, I'm going to interrupt you just for a second. We're going to do one last poll here real quick.
Okay.
All right. Thanks, guys.
So how to avoid an audit is highly linked to how to avoid paying so much taxes. If you have an accountable plan, you're exempt from Social Security, you structure your housing allowance correctly. By taking income off your tax return and taking expenses off your tax return, you reduce and eliminate your audit flags, which reduces or eliminates your audit risk. So if you're a pastor that reports his ministry expenses, and let's say you're in one of the denominations that ties to the district, so some people might put that tied to the district as a charitable deduction. Well, if you're doing that, well, it should also be subtracted from your Social Security income base that you calculate your Social Security tax on. But if you claim it as a charitable deduction, you're not doing that. So if you're paying $5,000 in tithes on $50,000, you just wasted $750 because you paid Social Security tax on it that you didn't need to. So, there's so many different ways, but by structuring your ministry expenses as an accountable plan where it's pre-tax, it comes off of your W-2, out of your cost of ministry position, so it's not part of your salary package, it's paid as a separate vendor check, it makes it pre-tax, not taxable, and not on your tax return or your W-2. It reduces your W-2 income, it eliminates your expenses showing up on a 2106, which the 2106 is probably one of the highest audited forms for pastors there is. If you have employee business expenses, that's the only thing I've seen pastors really get audited on, is justifying their expenses. And maybe they're charitable once in a while, but once an auditor sees you're a pastor, they sort of take it for granted that you're a giver. But those expenses are really important. So, and two, you usually report the expenses wrong because you take all the expenses if your salary package is 50% non-taxable with your housing, you should only get to deduct 50% of it. Again, if you're exempt from Social Security, that part doesn't apply because your income is subject to income tax and your housing isn't, and it's not subject to Social Security tax, but you're not paying Social Security tax on your housing allowance anyway, so it probably has a negligible effect. It makes a lot less of a difference. So structuring your compensation, understanding who you are as a pastor and what is deductible, and by setting it up as an accountable plan, or by maximizing your retirement and maximize your housing allowance, it reduces the things that are on your tax return. So by reducing or eliminating your expenses, ministry expenses on your tax return, by reducing your charitable deductions if you tied to the district and making it a business expense, reduces that, which charitable, if it's over 10% of your income, is an audit flag. So by structuring your expenses correctly, you reduce your audit flags, and that reduces or eliminates your chance of audit. If you've got a Schedule C for your honorariums and stuff like that, you can deduct expenses. Well, people with Schedule Cs get audited about 4% of the time. People without it, it's like 0.4. So, it's not a lot of risk either way, and you're not taking expenses you shouldn't anyway, so it's not that important, but I don't know anybody that enjoys the audit experience, so we might as well avoid it. So real quickly on bivocational income, don't automatically, if your church is paying you part-time, you've got a real job because the church is growing, or I should say a secular job, not a real job, because pastors usually work 24/7. But if you're bivocational and you're receiving, let's say, $1,000 a month or $1,500 a month from your church as it's growing, don't automatically assume that should be all housing allowance. I would first, because that is subject to Social Security tax. Now, if you're exempt from Social Security, it can be all housing, and that's really easy because you don't pay any Social Security tax, and it's not subject to income tax. But if you are in the Social Security system, I would look first at how many miles, what are your expenses incurred that you incur in ministry, and if you can justify taking it as a reimbursement for expenses, you absolutely don't have to have it as a housing allowance, and you can have it all pre-tax. It's just a reimbursement for expense, not taxable to you. You put it at housing expense, and it's subject to Social Security because you're in the Social Security system. If you get $1,000 a month, that's $12,000 a year. That's $1,800 that year. That if you had that much in ministry expenses, mileage and the like, you might not have had to pay that. So by structuring your income correctly, whether you're is really important if you're bivocational and you're getting a stipend from the church. Your honorariums go on either other income line or on a Schedule C, depending if you have expenses that go against them. And the last area, because I think we went over a little bit, is the health insurance reimbursement. I hate to blame everything on Obama, but when Obama in 2015 was on his way out, he decided that to get people to go on Obamacare, if he could get everybody to be in the system, get them off their own plans or whatever, get them all in a single payer system, that'd be great. So what he did is he made any organization, employer, churches that reimburse for individual health insurance plans, that used to be pre-tax. All of the money you got from the church to pay for your personal health care was not taxable. Well, Obama made it taxable at the end of 2015. So all of that's got to be added to your W-2. And if you're in the Social Security tax system and you had 12 grand, 10 grand, 9 grand, whatever, you're talking $3,000 to $4,000 in taxes, that you just got handed because all of a sudden your health insurance premiums are taxable. Well, we've been trying to figure out how to get around this, what we can do. And, again, because over 75% of the churches in America are 150 people, and they probably don't have a group healthcare plan. I think the number of churches that have group healthcare is way under 15%. So that means everybody's either covered by their spouse or they got an individual health plan to get reimbursed that they should be paying taxes on. Well, they just came out about 45 days ago with a new law, the QSERA. And it's a small employer HRA that allow a married couple to deduct up to $10,000, exclude $10,000 from your income for health insurance and other medical expenses. And if you're single, it's $5,000. So we are actually coming up with a prototype plan. We have the resolutions being developed as we speak, and the plan documents, the enrollment forms, and that, where we're going to have it on our website, and I'll send out an e-blast, and I'll let Eric know from Aplos. But you're going to be able to adopt this agreement, have the pastors e-sign these forms, keep it in your file. You'll automatically get an email from us. We'll get copies of it, and so will our insurance affiliate. And you'll be able to, every pastor that you have will be able to exclude $10,000 of their health insurance if they're married, and $5,000 if they're not. That's going to save, a married couple $3,000 on their tax return or more. So there's a lot of stuff. Thank you for your time. I know I went over, but I wanted to at least get in most of the important stuff that I could think of. So,
all right.
Thank you.
I think we can try and tackle just a few questions if we have, we do have 7 minutes or so as part of the Q&A.
And if there are, I'll keep going if people want, but it'd be nice to know if there's anything they want more clarity on.
Okay, so I have, starting from the top here, what if you own your own home? Can you still claim housing allowance?
Yes. And that's absolutely where a housing allowance is supposed to be. If you are living in a church-owned home, it's a parsonage allowance. And any expenses you spend on the parsonage out of your own money, you can calculate that and set it as a parsonage allowance. If you have your own home, you want to take your mortgage payment, your property tax, house insurance, utilities, any repairs. You're planning on buying a new bedroom set, putting in a new air conditioner or furnace, getting a new fridge. Calculate all of that when you're setting your housing allowance every year, and then maybe add $1,000 or $2 to it, just for unforeseen expenses, because we all have them. Now, any of those expenses that might be ministry-related expenses, you're better off taking those as ministry expenses instead of housing expenses, because you don't have to pay either income tax or self-employment tax on ministry expenses, where you've got to pay Social Security tax on your housing allowance. But yeah, absolutely want a housing allowance if you own a home. And you can take the whole mortgage payment, if it includes your property taxes or not, but yeah.
Okay, that's great. I see a lot of people sort of tapering off right now, probably have some things to do in the next hour. Just a reminder that we're going to be making this available as a recording, and we're going to send out an email to follow up with a link to that recording, as well as any links that Scott's provided us here in his webinar. We'll provide those as well. There's a question from Mike regarding line 22 in excess housing allowance. Is that on the form 1040?
Yes, it's on what's known as the long form, the form 1040. You have your income and then any adjustments to income on the front page, and line 22 would be other income. And there's a blank thing on the left side of that form where you can write in excess housing, or it'll automatically get filled in, housing allowance or whatever when you enter it in the program. But if you're doing it by hand, yeah, that would be the line.
Okay, great. And another question here. I thought it was illegal to reduce my salary to create an accountable plan. Is that correct?
You can't do it by salary reduction. That is correct. That's why, and Richard Hammer, the gurus and all that, you got to be very careful with the accountable plan. You want to have, what I always tell pastors and churches and the boards, it's the cost of ministry position, and the cost of ministry position, whether it's a lead pastor or youth pastor, goes along with the theory that the church says, hey, we got $50,000 for your position. How do you want us to break it up? Well, it's the cost of ministry position is breaking into two parts. How much is the church not going to reimburse them for expenses, the accountable plan, and how much is their salary package? And if you pass resolutions for both, and it's called the dual resolution approach, it's perfectly legal, because the pastor is going to fill out an expense form every month, hand it in, gets put in a file, and as long as he spends the expenses that he's been forwarded using the accountable plan, he's absolutely fine. And he's accountable to the church, not the IRS. If you took that and just made it as a deduction or part of his payroll check, that's wrong. The accountable plan cannot be a salary reduction. It has to be split from the payroll purposes and the salary package part. So it's, again, the perspective of how you look at doing your salary packages. Don't call them the salary package. It is the cost of ministry position. We're offering $50,000 for this position. They've got 10 or 12,000 of expenses that the church is not going to reimburse. So he's going to have that as an accountable plan, get paid a separate check, whether it's once, twice a month, however you want to do it. And then on the payroll, you have your W-2, your salary component, you have your housing component, and you have your benefit component. So by structuring it the right way and doing the accountable plan the right way, and again, it doesn't work for everybody. It's not a good fit. Number one, you've got to be a church that wants to help their pastors save taxes and will pass them. You got a whole bunch of staff and they're not going to fill out the reports and they're not going to be accountable. The treasurer and the board's really not going to want to adopt an accountable plan because the pastors aren't going to follow the rules. Well, then why have it if they're not going to be in compliance? So, yeah, it's completely legal to have an accountable plan, but it's completely not legal to have it as part of salary reduction. Okay. So you have to follow the dual resolution approach to have it legally.
Okay, great. Here's an interesting question from Joe. Does all of this apply to, what we've been discussing here for the last hour? Does all this apply to religious nonprofits that are not classified as a church as well?
Structuring your compensation can. It depends on if you're a faith-based nonprofit. You can possibly use, again, it's situation by situation, all the benefits of a pastor. If you're an ordained pastor working in a faith-based organization, you probably have the ability to get a housing allowance and do some of these things. Every ministry, every business can do the accountable plan, and they can separate it out and have it as either a budgeted item on the church or the business nonprofit budget and reimburse out of that, or they can allow the pastor or the employee to segregate their salary and do it as an advance on their salary. So it all depends on what nonprofit you work for. How is it faith-based in name only, or is it actually faith-based because it does religious functions? The ones that do religious functions and you're part of that, you absolutely have a real good chance of qualifying to have a housing allowance and all of the other benefits.
Okay. We're coming up at the end of the hour here. I'm happy to go through some more of these questions if you are, Scott, but if you have to run, that's okay as well.
15, 20 minutes before my next appointment, so no problem.
Okay, so let's move on. And we got Amber asks, how do I what's that?
I said I'm a sick person. Actually, love taxes.
Amber asks, how do I know if I'm paying both halves of the Social Security tax or if our church is covering their half? Okay.
There's two ways churches reimburse for half the Social Security tax. If your W-2 looks like a normal employee where box 1, 2, 3, 4, 5, 6 are all filled in, they're probably paying half your Social Security tax because they're treating your W-2 almost like you're a normal employee. So that's one way that they would, because the number that shows on a normal employee's W-2 is, the Medicare and Social Security tax together equals 7.65%. So if they're doing it and they're showing it on the W-2, they're showing 7.65% of your tax there, and then you would have to match it as a self-employed pastor, the other half.
Gotcha.
Well, okay, no, there's more to it. The other way is, and let me rephrase that a little bit so it's not too confusing. If the church is taking out the Social Security Medicare tax for you, they're matching it themselves. So, if Social Security and Medicare tax is showing on your W-2, that's the easiest way to know, then your employer is matching your Social Security and Medicare tax. If it's not, that doesn't mean they didn't match it, but you would know it because they'd say, we're matching half of your Social Security tax, but then they have to add that to your total salary package, and that would increase your W-2. Those are the two ways churches cover half of your Social Security tax.
Okay, I think you covered this, but we're getting asked, do you have to itemize if you claim a housing allowance?
You mean itemized deductions as far as, no. If you have a housing allowance, that just means you can exclude whatever you spend on your house from your taxable income. Itemizing deductions for federal tax purposes is a different thing altogether. That has to do with how much your interest is, property taxes, state withholding, charitable contributions, excess medical expenses, business expenses, ministry expenses, all of that. And if those together all are greater than your standard deduction of, call it $13,000, you get to use your itemized deductions. Well, if your house mortgage, is $100,000 and you got a 3.5% interest rate, you're going to have $3,000 or $4,000 of interest. If your property taxes are $2,000 or $3,000 and you have $2,000 or $3,000 in charitable deductions, you're only going to have $9,000 of itemized deductions. Well, if you're married, your standard deduction is $12,900 or $13,000 this year. And so your standard deduction is higher. So even though you can itemize your deductions, you get your standard deduction because it's higher. So you get the higher of your standard deduction or your itemized deductions. So because you have a housing allowance doesn't mean you itemize. You don't have to show how you spent your housing allowance when you file your taxes. So itemizing deductions is a whole different item, and that's only if you qualify to itemize.
Okay. And a question here. I'm the treasurer of a church, and we have musicians. I issue them 1099s rather than W-2s. Is that okay?
Yeah, they're not under your control. They show up on Sundays or Wednesdays. If you pay, a lot of churches do it. If you're paying somebody that is, quote, not an employee by definition, the 23 definitions of the IRS, yeah, and they are independent contractors and musicians fall into that. You pay them over $600 during the year, you should give them a 1099. So if they're not going to be employees of the church that happen to be musicians, and they're not on payroll, yeah, if you pay them over $600, you should do a 1099, and that's perfectly good.
Okay, that makes sense. And then here's a scenario we're given. Pastor earns $50K a year, and I use the housing allowance method of the cost of rent for his home, which he owns, $3K a month. I don't know what that. I'm assuming that's mortgage.
Okay.
So his allowance. Yeah. So his allowance is $36K, and his taxable income is $14K. Is that okay?
Yeah. Yeah, it's a good point. In our first webinar a month or two ago, we talked about how to set your housing, and again, I've got some videos on my website about that. But yeah, the fair rental value plus like utilities and maintenance is how high you can set your housing allowance. So if your actual expenses are only 20, but your fair rental value of your house, including utilities and maintenance, is 36, yeah, you can take 36. Then if you happen to buy a house that year and you put $15,000 down payment, whatever, you can actually deduct your down payment too. But you can't deduct your actual expenses that are over the housing allowance that your resolution states. And so if you set your housing allowance at 36 and you spend more than that, well, you can only exclude 36,000. But yeah, you're absolutely okay if the fair rental value of your house with utilities and repairs is $3,000 a month. You're fine with 36. Yeah, some treasurers have a little problem with that once in a while because it sounds too good to be true, but no, in that case, it's absolutely okay.
Okay, and I think we're jumping into some of the questions regarding the health reimbursement stuff. One question: can you pay Medishare payments with that plan? With this plan? Not sure.
And again, with these plans, some do and some don't. It depends if they qualify. If it's a group healthcare plan, then if it qualifies as a group healthcare plan, then no. If it's an individual health plan, yes. So again, every one of them is going to be an individually specific situation. But in the next week or two, we are going to have a lot more information on the QSERA and what can, but it's made for small churches under 50 employees. If you're on Obamacare and you're getting subsidized, we've got to look at it because there's some exceptions to the rule. If you're on Medicare programs, if they're not considered qualified group plans by the IRS, then you probably can. So they just came out with a law and they're not giving a lot of guidance yet. So it's coming out daily. And so we're hoping March 1st, we'll have it on our website with the adoption agreements, with all the information. We might even have it sooner. That'll be a talk I have tomorrow, is getting updated on where we're at with our website with the healthcare. We will get a special email out to all of you on the healthcare and all the upcoming things. But if you want the new website that we're launching just as a ministry resource center is called ministryresourcecenter.com. And right now I just have my 11 or 12 videos there. You can see what you think of it. We probably have, it's coming soon on the tool, the virtual CPA and the subscription service, which are coming, which are going to give you the ability to have a CPA firm. Have them accessible to you for any payroll, accounting, tax questions you have to structure your payroll. So ministryresourcecenter.com or payrollforpastors.com. And we hope to help you in any way we can.
Okay, I'm going to skip a few more of these health reimbursement ones. I think you just answered those. Here's a question. Is there a way for a church to help cover tuition for education for a pastor without full tax liability on the amount?
Again, situational, but yes, you can have, if it's not, again, it depends sometimes if it's church related or is it going to allow him to get a higher position. But if it's set up under a cafeteria plan or it's offered to the pastor, there's certain times it's taxable and there's certain times it isn't. If it's done the right way, you can exclude up to like $5,000 or $52,500 of it. If it's done or it's a church requirement, and if you get to certain levels and you do certain things, then if it's part of a certain program, it could be exempt. So again, it's individually specific situations that'll dictate. There is a way in most situations to get reimbursed for your health or for your educational expenses without some or all of it not being taxable. But again, it depends on the situation.
Okay. There's still quite a few that probably need to be taken care of or answered offline. So maybe we'll just leave it at that for now, and we'll try to get to those through email.
Yeah, if they want to email, we can do that as well. Email their questions.
Okay. Are you comfortable with them emailing you, Scott, or do you want me to them to funnel that through me first?
Well, either way, if I get 200 emails or more a day, if it came to you, I'd know what they're about, and I'd probably be able to answer them.
Okay.
So that might be good if you get them and forward them to me, or even in bulk, whatever you want, depending on how many questions you have. But yeah, I'll be glad to answer them all.
Okay. How about, we just have one last question here regarding more specific to you and your practice. This individual has an accountant that he was thinking would be okay to call you with any questions. Is that something that maybe just...
Oh, he has, this pastor or whatever has an accountant that might want to ask me questions?
Yep.
Oh, yeah. Yeah, no, I'm here to serve.
So we've got your number there up on the slide here. as well as your email address. And
Be persistent because it's tax season. I have literally 16 appointments a day, 5 days a week, and 10 or 12 on Saturdays, and it's a crazy time. I personally do over 1,100 of my company, which I own, is 4,000 tax returns because I love it. So it's crazy though. So give me a little latitude. If you email us, give us a couple days, email us back, call me back, because I really want to help. It's just I get a little overwhelmed this time of year with the amount of work, so I can't always get to an email. But I'll do my best.
All right. Well, hey, Scott, it was a pleasure doing another webinar with you. I appreciate everyone who tuned in today. And just take one last glance there at our contact information on the slide there, and keep a lookout for a follow-up email coming from me with links to access this recorded webinar, as well as the websites that Scott was sharing with you. Anyways, thanks again for tuning in, and just kind of take a look at aplos.com /webinars to get an idea of upcoming webinars that we have regarding accounting. All right, everyone, take care. Thank you.